All right, welcome everyone. My name is Nick Hershey, the president of the Mortgage Calculator. We are a lender and mortgage broker that operates in over 20 states. And we have over 200 loan officers on the team that would be happy to help out any customers that need some quotes on our rate options. And what we do every day is go over the general market conditions, check out what rates are doing, check out our actual live rates on all of our standard programs, and then we do a deep dive into a specific example. So today we're going to take a look at our 2 to 4 unit owner occupied primary homes. So this is where a borrower can occupy one unit and utilize the rent from the other units that are rented out for income purposes. So definitely a great option for our borrowers out there looking for a little bit of an alternative, perhaps maybe still pushed out due to affordability. This would perhaps open up some other options. So if you'd like a full breakdown, a full loan estimate, please go to our website or drop a comment here. We'd be happy to help you out. But let's switch my screen and we'll check out the live rates for today. So typically the best indicator for rates overall are going to be our 10-year treasury yields. So these are going to basically show rates trending in general, especially when we're talking about mortgage rates across different programs. So you see here the last 5 days, we had some good news going into last week. And with all of the market turmoil over the weekend, obviously we've seen some increase there. But let's take it a little bit further out. Instead of looking at the 5 days, we can still look at the last year and see we're still at 1 year and multi-year lows. So still a great time to be out there shopping for a mortgage, and we're still going to be at low rates. Just might have changed a little bit from Friday. But let's see what that actually means for our standard programs here. So these are our, let me zoom in a touch more. There are live rates here for a standard scenario for all of our standard programs. That way we can compare rates across all the programs. We set up a standard single family home, 500,000 purchase, 300,000 loan amount, 60% loan to value, 760 estimated FICO credit score, and estimated 40% debt to income. So we set all these options here with these basic settings so we can compare all the programs across the board. So here we were having some pretty smoking rates last week. It was absolutely amazing. I was expecting they kept trending the way we wanted. We might have been able to see some fours today, but we still have some great options. So first up here, our conventional option for our standard loan, primary borrower, 30-year fix, what you think of when you think of a mortgage typically. Rates come in today, 5.5. Final APR there, 5.754. Definitely about as low as we've seen in the last couple of years, which is pretty amazing. And if our customer doesn't qualify for conventional, typically the next option we want to compare is an FHA option, which allows more leniency on credit issues and higher overall debt to income ratio. That does have additional fees with the mortgage insurance upfront and yearly. So rates come in at a 5%. Hopefully we're going to see some fours there here soon. And the final APR with all the fees included comes in at 5.909. So as usual, just a touch higher than conventional, even though the rate's lower. The additional cost there with the mortgage insurance does drive the APR up a little bit. And for our VA eligible borrowers, VA programs are absolutely amazing. Rates as low as 5.125 and final APR there 5.35. That's much lower fees and costs there for our VA borrowers. And we have our USDA options showing some fours, which is amazing. Our standard USDA for properties that are in the USDA eligible area and borrowers that do qualify under the income limits. These options are pretty amazing. Coming in today here, 4.99, final APR 5.665. All the fees are included. So if our borrower qualifies for these options, you can see they're a touch cheaper than FHA or conventional. So when our borrower is comparing, definitely could be the best option. And here's some good news. Our non-QM rates have gone down. So it's been a while since we've seen a 5 there, which is pretty amazing. So non-QM allows us to go beyond the conventional FHA, VA, USDA standard options and use alternative docs. So bank statements, 1099s, P&Ls, all kinds of different options once we go into the non-QM category. So here our 30-year fix non-QM using bank statements are similar for our self-employed borrower. Comes in today 5.99 rate, final APR 6.249. And does take a little bit of time for non-QM to change their rates. So they're finally tracking down along with the conventional. And our alt doc options for investment Still the same as it's been the last few months here. Rates as low as 6.125, lowest rate option. Final APR there, 6.448. And we'll compare that to conventional. Just a touch change there. Conventional lowest rate option comes in 6.124. Just a touch lower than it's been before. Final APR there, 6.449. And one of our favorite options here, rates have changed here as well, which is amazing. Our DSCR stands for debt service coverage ratio, no income, no employment. We simply use the estimated rents from the property to determine a DSCR ratio. If the estimated rents cover the expenses, aka the property cash flows, that is a ratio over 1, which is what we use for these demos. And we have a standard 3-year prepayment penalty here on this first option, which is pretty standard. Rates today come in at amazing 5.875, which is lower than it's been in the last few years. Pretty amazing. Final APR there, 6.181, lower than conventional, lower than our standard alt doc, because we're able to add that prepayment penalty in there for those business purpose loans. And we can add a 5-year prepay to sweeten the deal a little bit more. Rates are the same there, 5.875, but notice the costs are a little bit lower. So the final APR comes in there at 6.096, which is blowing conventional out of the water. And we can always do no prepayment penalty for those states that don't allow it or borrowers that don't wish to have one. Rates are pretty standard there, almost identical to conventional, 6.125. Final APR 6.448. And we have second mortgages, rehab loans, fix and flips, one-time close, all kinds of different options. But today we're going to be talking about our borrowers that need a little more flexibility to perhaps purchase a multi-unit property. So also known as house hacking in some cases. If some borrowers are starting their investor journey, they often may want to start out with a primary multi-unit property where they can utilize the income from the other units and still reside in one of the units. So I found a property here just nearby me, one of the first ones that popped up here. Definitely a reasonable price. A lot of the properties that are 4 and plus units get the price way up there. So this is a more reasonable request, I would say. A 2-unit property at $699 will allow us to get some quotes across all the different options that we have. So notice this is a 2-unit property, a duplex, and our borrower can live in 1 unit and rent the other unit out for income. So with this setting in mind, first we want to look at a conventional option. So our conventional loan programs allow as low as 5% down for the purchase of a 2-unit primary home. And this is going to be for that exact home. Otherwise, it's a pretty standard conventional loan. And our borrower in this case has the same settings as we've set up before. So some pretty amazing rates, 5.875, lowest rate option, pretty amazing there. 2.375 discount points at cost there. And we have options for lender credits here. If we take the rate up to 6.99, we can even get 1% lender credits back towards closing costs. So some pretty amazing options there for conventional. And you can see that is that 5% down payment, pretty amazing, that 95% LTV. And just a couple other settings here. The monthly mortgage insurance under conventional, when we go 95 LTV, is going to be $188 per month for our borrower that has a 760 FICO credit score. So that's one of the items to consider when we compare FHA. So the next option we want to look at, typically one of the most common options for our multi-unit purchases, is going to be an FHA program. So FHA allows as low as 3.5% down for a 2-unit primary home. Other than that, it's a pretty standard FHA loan. So rate says low as 5%, pretty amazing. We couldn't quite get to those 4s. That has a cost of 2.164 discount points at cost. And we have some options for lender credits here. If we take it up to a 6% rate, we can get 0.954, almost 1% back in lender credits towards closing costs. And you see here the lower down payment, that 3.5% down payment, pretty amazing here to only have to put down $24,000. And that's the final LTV when you add in the insurance premium, that mortgage insurance that is financed. And the one thing I wanted to note here is the FHA rate here is going to be at $309 a month. So often with our higher credit borrowers, remember the credit doesn't change the MI cost here when we're talking about FHA, but under the conventional program, it did improve the MI. So that conventional option definitely probably preferable for most of our higher FICO score borrowers, as long as the 5% down works. Now, let's get into one of the coolest options, our VA eligible borrowers. Definitely a great advantage. VA programs are pretty amazing. And we can even do 100% loan to value on a 2-unit or even multi-unit primary purchase. So in this option here, we took it to the 100% max 5.375 lowest rate option has a 2.142 discount point cost. And we did find a 6.124 rate has just a slight cost there, 0.142, so almost the par rate there. And that is to finance the entire purchase of a 2-unit property and be able to rent out the other unit. Pretty amazing there. Otherwise, it has to follow all the standard VA guidelines, and of course has the VA funding fee that is included in there. So the LTV is actually a little bit over 100 once we finish. But that is an amazing option, and definitely great for our house hackers out there that are VA eligible. I definitely would recommend take advantage of those VA programs if you are eligible. And the final option for our borrowers that don't qualify for any of the standard programs there that we went over, many times our self-employed borrowers, as we mentioned before, need to use alternative docs. So we can still get a fairly low down payment option for our non-QM. So here we have our non-QM 12-month bank statement option. So that's our most common request when we have a self-employed borrower needs to use alternative docs. Typically, bank statements are the easiest way to reach their goal there. And we do have a lowest down option for any bank statement option is going to be 10% down for a 2-unit primary purchase there, and be able to use that extra income as well. And as always, no PMI on non-QM, so you will see higher rates here, but do take into account there is no additional mortgage insurance that is required on some of the other options. Rates, again, a little bit higher here because it's non-QM, and it is the lowest down. Of course, if we put 20% down, we'll see more reasonable rates, but 8.125 rate has a 2.475 discount point cost, and 8.5 rate has 1.975 discount points and costs. But we're able to use alternative docs, still do a very reasonable 10% down payment, and still use that second unit as income. And notice there is no mortgage insurance, PMI or MI here on our non-QM products. So these are great options for our borrowers that need some flexibility. Obviously, this was a 2-unit example, but you can still do the same for 3 or even 4 units. Some of the underwriting does get a little more strict there, but feel free to reach out to any of our team members. They'd be happy to give you the full breakdown for your actual quote there. So thanks everybody for joining us. I don't see any questions at the moment. Feel free to check out our website, themortgagecalculator.com, and we'd be happy to send you a full itemized loan estimate with all of the costs, fees, and APR included for your exact example. And we'll be back later this week with another episode of Daily Rates Live. Thanks everybody for joining us. We'll see you later.